Hey everyone, it's your girl. You know what day it is, right? It's Mortgage Tip Tuesday. Another Tuesday, another tip with your favorite loan officer in the whole wide world. Hashtag who? JLoan. That's right. I know I'm bringing you this video a little bit late, but I've had a crazy day. Summers are a little bit more difficult for me because I have to make sure that my schedule is very in line because of my kids' activities and then obviously my workload. But I could not go without doing this video, and it's going to be so awesome because of the fact I have done a video where we've talked about the differences in FHA and conventional, but I don't think I've ever shown you what the big difference when it comes to mortgage insurance is. And so I wanted to kind of show you this because a lot of borrowers come to me and during their first conversation, they want to know what is the better loan. But sometimes it's very hard to answer that question because although there are general differences between both programs, the biggest difference is going to come within your mortgage insurance premium. And so I just want to show it to you really quickly and give you a little bit of tidbit of information just so you kind of understand. So first of all, I'm going to show you an FHA scenario that is 3.5% down, and I'm going to do that in comparison to a conventional 3% down loan because that is the lowest that you can get as a first-time home buyer. And I want to show you the differences between the two. Okay, so let me lower myself here in the bottom corner, and let's take a look here. And what we're going to do is obviously I've done a little test case here, and the scenario I used is a 680 credit score on a $300,000 purchase. Again, this is 300,000 with 3.5% down, and this is a hypothetical interest rate. Remember, I'm not allowed to quote you actual rates unless I'm showing you APR, and since I'm not, I'm just putting a hypothetical interest rate in there. Okay. So the biggest thing is that when I click on my mortgage insurance, the premium for FHA is 0.55% when you're putting 3.5% down, right? But the biggest thing too is something that conventional don't have is they don't have this 1.75%, which is your upfront mortgage insurance premium. Okay, so they take your base loan amount, which is 300,000 minus 3.5%, and then what they're doing is they're adding back in this 1.75% because you don't have to pay it out of pocket. You can actually finance it. So your actual total loan amount is 294,566. Okay. Well, what I want you to really pay attention to is I want you to pay attention to this 13202 right here. Okay, because that is your mortgage insurance premium on this FHA loan. And what's really, really good about it is it doesn't matter your credit score. Okay, I could change your credit score to 620, and if I price it again, no matter what, it's still going to stay at that 132. Okay, even if I put it down to 580. Okay, so if I put 580, I come down and I price it, it doesn't matter your credit score because on FHA it's one blanket mortgage insurance premium. Okay, now when you go to conventional, your credit score does play a difference, but I want to show you the big difference just off top. Okay, so on the same loan scenario, what we did here is I'm going to go back and edit it so you can kind of see it, and this is information obviously from online. But primary residence, number of borrowers, credit score 680, 30-year loan, and then the loan amount on this one is 291 because it's 300,000 minus your 3%. It's a purchase, and your loan to value is 97%, which you're allowed if you're a first-time home buyer. Okay, so we click submit. I want to show you just off top the big difference in that premium. Right here, your monthly premium is what we're looking at is 281.30. So now if you remember on FHA, it was $132. So just, basic math, that's already $149 more in your monthly payment. Now, I knew someone would say, well, how does that change the payment? So I did another test case for you. So I'm going to bring this over here. And so if we did the 281.30 with your principal and interest payment, that brings your total payment to 2120.62 on this conventional loan at a lower loan amount. Okay? But now what we want is we want to take a look at that FHA, which even at a higher loan amount, because you're rolling in that 1.75% upfront mortgage insurance, if you notice, your total payment is lower, $1,993.88. But of course, I don't want to provide you with all the good and not all of the information, because the biggest thing on FHA loans is if you're only putting 3.5% down, you can never get rid of this mortgage insurance unless you refinance out of this loan. Whereas on conventional, if you get your loan down to 80% loan to value, you can request that mortgage insurance come off, or at 78%, it will automatically fall off just in case you forget, which people do, believe it or not. And so that's the big difference. One, you have that upfront, but this mortgage insurance at 3.5% down, you'll pay for as long as you're in the same loan. Okay. But remember how I showed you that it didn't matter the credit score, the mortgage insurance never changed, okay, because it's a blanket mortgage insurance premium. I do want to show you something that makes a huge difference. Why sometimes when someone says, why is this FHA loan better for me than conventional? Let me show you why. Okay, so let's say on this scenario where I showed you 620 all the way down to 580 on FHA. Well, one, you wouldn't be able to go down to 580 on a conventional loan, but let's move this down to 620, okay? And if we move this down to 620 and I click submit, not changing any other scenario on here, I want you to look at the big difference in your mortgage insurance premium. That's $514.10. And when you talk about having to pay $132 on FHA, that's a $382 difference in your monthly payment that you would not have on an FHA loan. So of course, I'm very visual. So 514.10, I'm going to change that on my quote here. So now you can see the big difference. Okay, so now your payment on conventional, if you had a 620 score, would be 2353.42. Again, hypothetical interest rate with 3% down. So you get $9,000 down compared to FHA, which is $10,500. So you put a little bit more down, but again, 2353.42 if you had a 620 score compared to your FHA counterpart where you're at 1993.88. Okay, so these are the things that are hard to describe on a first conversation if you don't have an application. And that's why it's super important that when you call, you are able to provide us with your application, your income. All of that stuff matters. Your debt to income matters, especially, there's various reasons why you would use FHA. It allows for higher debt to incomes. It allows for lower credit scores. Your derogatory credit wait period is longer for bankruptcy is shorter for bankruptcy or foreclosure compared to your conventional. So there's a whole bunch of guidelines that you may not know that we'll know. But that's a big, big difference as to why sometimes I don't like people to force you into one loan or the other, but I think it's very important for you to understand the differences into why we may suggest one loan over the other. But know, as the borrower, you always deserve the right to know your options, which is why I show that to you, because you don't have to choose it. Because especially here in the state of Texas, we're a community property state, right? And what that means is on FHA loans is that if you're married and your spouse is doesn't want to be on the loan, we still have to pull their credit and count their debts against your application on an FHA loan that may make you not qualify. So there are some borrowers that would have no choice. If they really wanted to buy a home, they would have to do the conventional and probably pay the higher premium, because other than that, they wouldn't qualify using any other loan. So I hope this information is helpful. Please take a look at it, like it, comment, and share, because again, I do talk a lot in regards to program differences, but being I'm visual, hopefully you're visual, and this helps you to kind of understand the big differences between the two. So if I can help you in any way, let me know. It's your girl JLoan. I hope you have a fantastic rest of your week. I want you to stay safe and, of course, be blessed. Until next Tuesday, I'll talk to you then. Bye bye.